Good morning and welcome to Axis Direct Opening Bell, a quick pre-market briefing with key global cues, overnight trends, and market-moving insights to keep you ahead. We'll start with the global markets. Overnight in the US, stocks dropped sharply on AI disruption fears. The Dow lost 1.34%, the Nasdaq dropped 2.04%, and the S&P 500 fell 1.57%. Asian markets tracked losses on Wall Street, with the Nikkei down 0.8%, while Australia's ASX 200 was down 1.02% in the early trade. Moving to the Indian economy, retail inflation, based on the new 2024 CPI series, stood at 2.75% in January 2026. Rural inflation came in at 2.73%, while urban inflation was slightly higher at 2.77%. Food inflation was recorded at 2.13%. Meanwhile, Nifty closed at 25,807 yesterday, declining 147 points, whereas Bank Nifty settled at 60,740, marginally lower by 6 points. Nifty witnessed profit booking after breaking Wednesday's low, slipping to 25,752 before trimming some losses. The index found support near the upper band of the bullish gap formed on 9th February. A strong bearish candle was formed, reflecting pressure after Nifty IT tumbled 5.5%, with frontline tech stocks down 4 to 6%. For today, 26,000 remains the key resistance, as it is the highest call writing base for weekly expiry. Only a decisive move above this level could trigger short covering. On the downside, the bullish gap zone between 25,781 and 25,704 should act as immediate support. The broader structure stays positive as long as Friday's low at 25,492 remains protected. Nifty futures dropped 136 points to settle at 25,858, with open interest rising 2.3%, indicating fresh short position. Bank Nifty futures eased 12 points, with open interest declining 8.2%, pointing to long liquidation. FIIs remained marginal buyers in the cash market, with inflows of 108 crore rupees, taking cumulative net inflows to 6,021 crore rupees. The long-short ratio stayed unchanged at 0.22. In the derivative segment, FIIs and proprietary traders exhibited a bearish tilt, marked by significant unwinding of long call positions alongside fresh additions in long puts, outweighing their futures exposure. Meanwhile, retail participants turned relatively bullish, emerging as net buyers in calls and aggressively shorted put options, taking net seller contracts to nearly 3.3 lakh shares. Volatility inched higher, with India VIX rising 1.47% to 11.72, indicating a mild uptick in near-term market caution. Futures premiums rose 11 points in Nifty and narrowed down 7 points in Bank Nifty. PCR dropped heavily to 0.82 for Nifty while easing to 1.14 for Bank Nifty. Rupee ended slightly higher at 90.6 against 90.7, signaling broader trend remains cautious and range-bound. Sectorally, Nifty consumer durables advanced 0.4%, while Nifty IT emerged as the top laggard, declining 5.5%. In F&O space, Max Financial Services outperformed with a 4.8% gain, while KPIT Technologies lagged, slipping 7.4%. On commodities, spot gold fell 3.2% to $4,921.63 on Thursday, as strong US labor data reduced expectations of near-term Federal Reserve rate cuts, outweighing safe haven demand from the US. Iran tensions. Initial jobless claims declined to 227,000 for the week ended 7th February. Spot silver dropped 10.73% to $75.22, pressured by a stronger dollar and firm labor data. Investors now await CPI data for clearer signals on the Fed's rate outlook and silver's direction. WTI crude fell over 3% after the IEA lowered its 2026 global demand forecast, while concerns over potential US attacks on Iran eased.
That's it for today. Please note that this podcast is for informational purposes only and should not be considered as financial advice. Please refer to our website for the full disclaimer. Thank you and see you in the next episode. Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.